and you choose to be online, please don't inform me. I don't want to know, I don't want to hear. Is it clear? Is it clear? Don't ask me because I cannot give you permission to be online. What you choose to do is your right. But I run a hybrid class. I will be online, okay, but we prefer physical classes. But at the same time, I do understand that you have your own issues. But I'm working for somebody. I have to abide by rules and regulations. Please understand that. And I face an ethical dilemma always. You get what I'm saying? Please don't put me in that position. I don't want to. Okay? I hope I made myself very clear. Right? So, because many of them messaged me yesterday, I cannot say, yeah, it's okay. Are you with me? Yes, please don't ask me and put me in that spot. As I already told you, I'm always online and I'm physical. It's hybrid. But our micro-credential students, they are given permission to be online. So have I made myself clear there? Please don't message me and ask me for permission, okay? Right. Now let's see for today what I need you to do. Come. Take your IAS 1 folder, dear. Can you see this? Take that. Are you with me? Okay. Can you see summary? Okay. Click on that. Keep all this ready because then I can proceed with the topic. I need IS 1, page 1 and page 2. Open this page 1 and page 2. For the time being, this is what I need. Okay, the rest of it, as I progress through the class, I ask you to go through whatever I need to go through. You know it's inside the IS1 folder. Have I made myself clear, dear? I already told you every topic you will get e-notes. I don't have the habit of reading my textbook, or whatever I'm covering is in the textbook. Yesterday, remember how I taught you ethics? Through the summary, isn't it? If you read your textbook, whatever I spoke is in the textbook. I wrote that book. So I can't be reading my book. Is that clear? But this is the way I teach. I will go through the summary. We will sit and practice questions. Okay? Comfortable? Okay, come. Take IS 1. I'm going to start my recording. Online students, are you there, dear? Can you please say hi to me? Hello? Hello? Okay. All right. Morning, dear. Morning, all of you. I just wanted to, you all are online students, I know. Okay. Please do feel free to participate when I ask questions. I'll check your answers here, okay? Not that I'm not looking at you, but I have a huge physical class, so sometimes I might forget, but you can send me your answers. I will definitely your answers here, okay? All right. Please get your IAS 1 ready. I'm going to start the recording. Today's topic is IAS 1 presentation of financial statements. Now, if you look at this, you must understand that this is the very basic financial statements that you need to know. Every company, listed company, must publish their financial statements. Yesterday, I showed you a set of integrated financial statements by Sunday Constructions, but I clearly told you that presentation of financial statement is just one small part of published financial statements. You remember, dear? So your syllabus will definitely focus on the preparation of financial statements, but it also includes financial, non-financial information, disclosure requirement, and the various reports, including integrated reporting. That's your entire syllabus. Whatever we put in that published financial statements targets to meet the needs of the primary user. So the first thing you learn about IAS 1 is it gives us a basic format of SOPL, SOCI. That's the first statement there. SOPL, SOCI. Basic rule to remember. Anything relating to the current year will go into SOPL and SOCI. Those of you who watch the conceptual framework will understand the rule. Matching, accruals is what we apply here. The basic rebuttable presumption in the conceptual framework is all income. You didn't watch the conceptual framework. Are you kidding me? Hello? I already told you, dear, if you don't finish these things, I cannot progress with my class. If you consistently do this, I will just have to stop the class and I will just have to tell you to study these topics on your own. I mean what I say. Please don't put me in this spot anymore, because if I give you a blended learning topic, these are topics you should have finished in your earlier studies. It's the onus is not on me. Are we clear? The rebuttable presumption in the conceptual framework is all income, all expenses must go into the SOPL. So what I will do now, I will do IAS 1 and CF together. Hello? But you should go back and study. Huh? You have a lot of things to study. I'm telling you once again, without the basics, we cannot build a house, right? So coming back to this, repeat with me. SOPL, SOCI will only record which year's items there. Current year item. The underlying principle or concept here is accruals, meaning anything that relates to the current year, whether paid or not, whether received or not, it doesn't matter. We follow accruals. What is due goes into SOPL, OCI. The rebuttable presumption is, come on, all income, repeat, all expense goes into SOPL. But we have a separate section called SOCI. Miss, that's confusing. You said all income, all expenses goes into SOPL. Then what goes into SOCI? Again, those of you who watch the conceptual framework will know that this section on SOCI, the only authority that can rebut the presumption that all income and expense must go to SOPL is the IASB. Got it? What's the rebuttable presumption there? All income expense goes into, as long as it relates to which year? Current year lah. But there's only one authority who has got the right to rebut this presumption. Who is that? Even for the IASB, it is conditional. Very important for you to understand. That means it's not like IASB can decide whatever they want. What goes here is conditional. IASB says, if this particular transaction gives more relevant information, okay, if it gives more relevant information, to post it in SOCI, provided it is measured at current value. What are the two conditions? It must be measured at, now of course you're going to ask me, Miss, what is current value? You should know the conceptual framework. In chapter 6 of the conceptual framework, measurement basis, current value is defined as fair value, current cost, and present value, means value in use or fulfillment value. If the asset or liability is measured at current value, repeat with me here, if the asset or liability is measured at, and it gives more relevant and faithful representation to post it into SOCI, then the IASB has got the authority to rebuke the presumption that normally all income and expense goes to SOPL, and IASB can decide what goes to SOCI. So can you see suddenly a principle-based framework has become a bit rigid? Hello? Agree? So this is criticized. Practitioners are calm. Only IASB can decide when that becomes rule-based already, right? So it is a criticism, but then IASB says, although that looks like rule-based, it is still based on the principle that it must be measured at current value. Come on, and it must give more relevant information. That's when the IASB decide what goes to SOCI. SOCI. Tell me, what did you learn about the first format? First financial statement. It's called SOPL and rebuttable presumption. All income and expense goes where? But it's based on what principle? Matching. Accrue works. Means whether I paid or not, received or not, doesn't matter. As long as it is due relating to which year, dear? Current year. It goes into the SOPL. Number one. So what goes into SOCI? Only one authority can rebuke this presumption, IASB, but that's conditional. The asset or liability must be measured at current value, and if provided gives more relevant information. Obviously, your question is relevant information to who? Of course, everything we do is the primary user. Then IASB will decide what goes to SOCI. So ideally, if you learn IS1, SOPL is different, SOCI is different. IS1 says company can show them as two separate statements if they want to, or company can put them together, SOPL, SOCI. Go to the bottom of the page. Do you see total comprehensive income? Come on, look at the bottom of the format. Do you see total comprehensive income? Now you understand, Miss, what is total comprehensive income? It's nothing but profit plus, OCI. Okay, that is total comprehensive income. Okay, repeat. What did you learn? Companies are permitted to prepare these two statements separately, or they can put it together. Both are permitted by IS1. But once again, those of you who studied conceptual framework, what is this statement called in the conceptual framework? Statement of financial performance. What is it called? Statement of financial performance. You see, now you must be thinking, why Manon keep touching ISCF? ISCF. One of the major part of your SPR syllabus is to know the inconsistencies between the framework and the standard. Now, do you all understand the importance of studying the framework? Hello? Without the framework, there is no SDR. Your entire syllabus is called framework-based teaching. That means you learn the conceptual framework. Every standard is derived from the framework, but there are some differences between the standard and the framework. So when the argument comes, Miss, there seems to be a difference. Which one to follow? Always the standard. Got it? Framework is not a standard. So there are some inconsistency, and your exam will ask you that inconsistency. Again, I'm reinstating, do you all understand the importance of studying the conceptual framework? Okay. Now, as I've already covered that, so that's the story with regard to SOPL. A quick recap. SOPL, SOCI. SOPL will show all income and expense relating to the current year, paid or not, received or not, as long as it is due, following matching concept, must go into the SOPL. Rebuttable presumption is that. But there's only one authority who can rebut this presumption, the IASB, and that too it is conditional. It must be measured at current value. It must give more relevant information. So that IASB will decide what goes to SOCR. These two can be presented as two separate statements or together as one statement. One statement at the bottom, you will see total comprehensive income. Okay? But CF called this as statement of financial performance. Okay, huh? Any questions? Now, tell me, Miss, that means how do I know what goes to SOPL? Okay, go back to the rebutable presumption. All income, all expense goes there, right? What type of income, what type of expense? That's the next question. Of course, traditionally, we learn now trading activities will go here. All realized gains and losses will go here. Am I right? Into the SOPL. That's the traditional way of looking at it. But that's not what the CF said. The conceptual framework says, come this side. Do you see a balance sheet on this side? Okay, in the balance sheet, I'm sure all of you know this. Can you see a list of assets? Come on, a list of, speak. List of assets, a list of. The framework says the movements in assets and liability is what goes into the SOPL. This is the most important part. Take note of that. The movements in, come on, assets and liability, meaning asset increase income. Got it? Asset decrease expense. Liability increase expense. Dear, participate. Hello? Liability decrease its an income. So now you understand the relationship between the SOFP items and the SOPL item. So asset liability movements is what goes here, including gain or loss on disposals. Clear? Including gain or loss on disposal. Basically, if I have a non-current asset and I used it for a couple of years and then I sell it off, I might make a gain or a loss. Of course, it's already realized. So always remember, this is a gain given in the conceptual framework. All gain, come on, all losses goes into the SOPL, provided it is already derecognized, means we have disposed. So when we dispose an asset, dispose a liability, any gain or loss will also go into the SOPL. All clear so far? So, as a student, Miss, do I learn what goes into SOPL and SOCI? Or is it better you memorize SOCI items? Everything else goes where? Don't you think that's faster, dear? Anyway, you and I can't decide what goes into SOCI. It's already pre-decided, right? So the fastest way I tell my student is just learn the SOCI items. Everything else goes into SOPL. Ready? Ready? Okay. SOCI has got 7 items. How many? But in your syllabus, I can't cover all the 7 right now. We are too early into the syllabus. I'm going to teach you 5 items. But in your background, you keep telling yourself, hey, OCI got 7 items. Today, Manan will start with 5 items. Are you ready? Look here, here. Okay, those of you online, you just have to listen, okay? IAS 16, 19, 21. 16, 19, 21, 39. Stop. Miss, we don't have IAS 39. I know. But you remember it as 39. Currently, it's IFRS 9. Okay, what is this, dear? I have a reason for giving you that number. Remember it as 39. but it's actually IFRS 9 and IFRS 9. See, there are two IFRS 9. I don't want you to get confused. So just remember it as 39, but it's actually IFRS 9 and IFRS 9. Repeat. Faster, faster, don't drag. Come on, 16, 19, 21. But IFRS 9 and IFRS 9. Now stop. Let's see what the items are. 16, revaluation model. So there will be revaluation gains or losses. You don't panic and write it in the second page. Just relax. In my class, trust me, everything is this and this. Feel comfortable, do whatever you want, but don't panic, thinking it's not there in the notes. It's all written for you, okay? Just relax and study. Come on. 16 is revaluation gain or losses. 19, stop. Miss, we have never studied 19 before. True. IS 16 is part of FR syllabus. Everybody knows like cost model and revaluation model. Remember? That revaluation gain or loss goes to SOCI, but actually got situations lah. We will learn it in IS 16 later, but for time being, revaluation gain or losses. 19 is an SBR core topic. That means this is the only paper it will be examined. Do you agree that goes without saying every semester you'll get a question? Am I right? Okay. What does IS 19 deal with? Employee benefits. One such employee benefit all of you should know is pension. Correct? But in pension, you imagine as a company, I promise to pay you a certain percentage of your last drawn pay for the rest of your life and rest of your spouse life and rest of the dependent life. Wow. That's difficult for me to gauge. How am I going to calculate this? How will I know how long the employee will live? What is their last drawn pay? How long the spouse will live? There might be inflation. Yeah, do we need to revise? Difficult. We accountants can't do this. So we seek the help of actuaries. Now, actuaries are also human beings. They can make an estimate, but it can never be accurate. Agree? I mean, they're not God to design the mortality rates, correct? So, these actuaries will come in every year to keep updating and revising their estimates. Okay? So when they revise the estimate, there will be a remeasurement gain or loss. Repeat with me, dear. Remeasurement gain or loss. Now, do you agree? Think logically. ISB is also correct now. This remeasurement gain or loss is being caused by a human being, nothing to do with the trading activities of the company. Agree? That's why ISB says it's better to put it in OCI. It shouldn't affect your EPS calculation. See, SOPL, that profit is used for EPS calculation. And you know that's one of the most important ratios that investors look at, which is governed by IAS 33. If I take this remeasurement gain or loss and put it into SOPL, it can distort profits. It's got nothing to do with trading activity. So ISB has decided remeasurement gain or loss will go into SOCI. So far, 2 R's. Remeasurement gain or losses. Correct, employee benefit. But remember, this guy will come into revise his estimate. So we call it remeasurement gains or losses on the DBS scheme. Don't worry about that. Just remember pension scheme for the time. Later you'll study IS 19 in detail. Okay? So 16, 19 done. 21. Parent companies can have a foreign subsidiary. Agree? So parent prepares in financial statement in one currency. Subsidiary prepares in another currency. So you have IS 21 in your syllabus. We will be looking at consolidation of foreign subsidiaries later in group account section D. So think logically. Let's say parent is preparing financial statement in dollars. Your functional currency is dollar. Subsidiary say is in ringgit. what we have to do, how to consolidate, right? Two different currencies, right? So we take the subsidiaries financial statement, translate from ringgit to dollar, but exchange rates keep fluctuating. So surely there will be a translation gain or loss of the foreign operation. Foreign subsidiary. Lah. Now, once again, think logically. Has it got anything to do with trading activity here? If you allow this to be reported in SOPL, again, it will distort the profits. Lah. So you see, IASB has got a valid reason. They simply don't throw things into SOCR. It gives more relevant information. So that's the third item. Translation gains or losses on foreign operation. 16, 19, 21. Revaluation gain or loss on property, plant and equipment. Actually, it can also include intangible, but you will see later next week why I don't include this. Then the next one is remeasurement gain or loss on IAS 19 for pension schemes. Then the next one is translation gain or loss of foreign operations. Okay, 3 done. Now this one, actually it's IFRS 9 lab. I like to call it IAS 39. I'll tell you why later. Cash flow hedge. Now, I'm sure when you think of IFRS 9 financial instruments, you are all in practice. You should know what it's the topic like, you know? And when I say cash flow hedge, they will think, my God, it's so difficult. Trust me, it's not. SPR is a beautiful subject. It's my job to make it easy for you. Okay, so this cash flow hedge, you're going to learn under hedge accounting. We've got fair value hedge and cash flow hedges. Actually, we have one more hedge, net investment foreign subsidiary, not in your syllabus. So we have 2, cash flow hedge and fair value hedge. Later, when I teach you IFRS 9, you will see these cash flow hedges will also give rise to gain or losses. But hedge accounting is not something within my control. It's got nothing to do with trading activities again. So it gives more relevant information to put it into SOCR. But of course, there's an effective portion, ineffective portion. We'll learn the story later. For the time being, just remember it as cash flow hedge gains or losses. Hello, what are we learning? Where are all these items? We are learning this because you and I can't change it. Might as well we learn it one shot, okay? Cash flow hedge gain or losses. Last, IFRS 9. I'm going to introduce a terminology. Those of them sitting on my right-hand side, they are the issuing company of financial instruments. Means they are selling. They are raising finance. How can they raise finance? 2 ways. They either issue ordinary share equity or they issue debenture and loan notes, liability, financial liability. Repeat with me, who are you on the right hand side? Issuing company. What do you want to do? You want to raise finance. So what are you selling? 2 things. Either you sell, that's called equity, or you sell debentures or bonds, that's called why? Again, those of you who watch the conceptual framework will understand when you raise a debenture or a loan note, it's a borrowing. It will meet the definition of financial liabilities or liabilities Porter P. Conceptual framework, Porter P. See, again, you're looking at me because you have not studied. But really, if you come to class without studying the conceptual framework, you'll be very lost. Please ensure that you finish it. Understood? And 1 week you don't finish homework, it accumulates. Next week you have something else to learn. And if you keep lagging behind like that, it's very difficult to catch up. Right? And don't blame me because I've already been messaging you for quite a number of days telling you to finish all that before you come. I started, if I'm not mistaken, on Wednesday. Okay, never mind. So think logically. Liability, borrowing, of course you have to pay back. But equity, ordinary share, It's discretionary. You're not compelled to pay back. I mean, maybe if there's a liquidation after you pay off the creditas, the debenture loan notes, the preference share, if there is any balance left, residual. So that's why conceptual framework defines equity as residual. If there is any balance, you will give it to who here? The ordinary shareholders. They are the actual owners of the company. They are the highest risk takers because the rest of them are promised something. Got it? But equity shareholders are promised nothing. It's a discretionary. Okay, stop. Who are you? What are you issuing? One of two things. Equity or debt. Equity is ordinary share. Debt is like bonds and loan notes, whatever you have to pay back are borrowings. Now stop. What you sell, somebody has to buy. Who are you? Those sitting on my left-hand side. You all are investors. Very good. So what are you buying? Tell me. Look there and tell. They sell bonds. You? Yeah, but when we buy the bond, we don't call it bonds. We investors call it IID, investment in debt. Investment in debt instrument. Are you clear? They sell the bond. Come on, you buy the bond. Don't use the word debenture in both books. Don't use the word debt in both books. Issuer, debt. Financial liability. Come on. Investor, IID. Investment in debt instrument. Correct. IID la. Stop. Next one. What did they sell? The second category. Come on. Equity. Investor. Don't use the word equity in investor books. I am buying the shares. And don't have the habit of saying this. Shares. Correct. You can't say that. So, IIE. Investment in equity. Repeat with me dear. So see here, financial is so beautiful. It's one contract, two books. Somebody sells, somebody buys. So this fellow sells that IID. Seller is selling equity. Come on, IIE. Got it? Got it? Why did I teach you this? The last item. IFRS 9. When we buy equity as an investor, you know, la listed company, come on, market price goes up or down. Surely got a gain or a, but we don't call it gain or loss. We call it fair value gain or losses. What do we call it as? You know why I'm shouting that word out? Earlier I told you, gain or loss on disposal goes where? Look faster. That's disposal gain. Now I'm talking about fair value gain or losses. Don't get the two confused. So normally, see, when you do SBR, you're a consultant. You know, we speak professionally. So if you just give me words like this, that's a gain, that's a profit, that's CAT level idea. We cannot. We have to be very clear in what is the terminology to be used. Okay? So now onwards, don't tell me gain or loss. You must either tell me gain or loss on disposal, or maybe disposal gain, that's fine. Or fair value gain or losses. Okay, stop. Last item. IFRS 9. IIE. Whose books? Yeah, okay, buyer, fair enough. Whose books? When they buy the IIE, it's bound to have fair value gain or that fair value gain or loss goes to OCI provided the IIE is measured at fair value through OCI. Now don't panic. You're thinking, my God, how will I know that? Conceptual framework. You should study. All the measurement bases are in the conceptual framework. But don't worry, I'll cover it later. So now stop. Finish. How many items? Repeat first the number first. Background IFRS 9, huh? Come on. IFRS 9. Good. Very good. Now give me the theory. 2 R's. Revaluation gain or loss on PPE. Remeasurement gain or loss on pension. Translation gain or loss on foreign operation. Cash flow gain or loss. Actually, we got 2 la, IIE and IID. Remember, I said got 7 items. I'm only teaching IID. I'll teach you later, okay? Now we just learn it as, come on, IIE, fair value gain or loss. Now stop. These are the items that go to SOCI. But if you guys notice under SOCI, you have 2 subheadings. Can you see these 2 subheadings here? Come on. Item that will not be reclassified to SOPL. Come on. Items that, okay, I'm going to pause. Go to the second page. Go to the second page. Can you see I've written something for you? I don't want to teach because this is something you should have done in your FR paper. I'll give you some time. Can you see I've listed out the 5 OC? Don't bother to write this, huh? Don't bother to write this. The 5 item, I've written something that on, come on, read this, on disposal. Can you see this? Sometimes we have to do a reclassification adjustment. Sometimes we have to transfer to RE. Now, do you remember, I asked you to remember the digits, 16, 19, 21. This is actually, come on, IAS. Yeah, the old one. Huh? But there's a reason why I give this, because I want you all to remember, Miss, which item needs a reclassification? Don't worry about what's reclassification. Hold on. 2 item needs a reclassification and the other 2 needs a transfer to RE, and IAS 19 needs nothing. Okay. I thought somebody messaged me. Right. Stop. First you learned OCI got 5 items. Now you're going to learn on disposal. Observe, on disposal. The top 2 digits. What was the top 2 digits? 21 and 39. These 2 items. Now you'll understand why I'm keeping it like that. Huh? The top 2 digits needs a reclassification on disposal. Please don't read reclassification. On disposal, it requires a reclassification adjustment. The extreme 2, that's, come on, 16 and IFRS 9 needs a transfer to RE on disposal, and IAS 19 needs nothing. Again, Miss, what's this reclassification adjustment? Hold on. I need to explain something. Miss, why did you say top 2 needs reclassification? These 2 only need transfer to RE. Again, the rigidity applies. As much as IASB is the only authority who can decide what goes to SOCI, IASB is the only authority who can decide what needs a reclassification adjustment. So again, might as well I memorize it. It's not something that you and I can decide. So I tell my students, how do you remember this, dear? So Miss, OCI got so many items. How do I know what goes under will not be reclassified? What goes under will be reclassified? That's what I'm teaching you first. How do you remember? Top 2 digits. What are the top 2 digits? 21 and 39. You understand now why I'm asking you to remember it as 39, huh? The top 2 digit needs reclassification. The extreme 2 What are the extreme two? 16 and IFRS 9 needs a transfer to, but this happens on the disposal. And IAS 19 needs nothing. Got it? Okay, now don't worry. I'm sure you're thinking, Miss, tell me what's reclassification. Be patient. It will be taught later. Now stop. What did you learn there? OCI has got 5 items. The top 2 digits on disposal needs a extreme 2 needs a transfer to RE. IAS 19 needs nothing. It's not disposed. Okay, it won't be disposed. But I'll come to that later. Okay. Now that you have basically understood what is the format of SOPL and, come on, OCI. Let's go a little bit in detail one by one. So I already told you in the conceptual framework, this is called statement of financial performance. Yeah. Okay. Majority of you know all this. You're not that you're not familiar with SOPL, but just to reinstate, what's the first item in SOPL? Remember this rule. This is one of the areas that are highly manipulated in practice. Okay? Earnings management. People will either try to inflate the revenue or deflate it. So this revenue item is governed by IFRS 15. Of course, very much in your syllabus. But one thing that you need to learn for now, Miss, what item goes to revenue? Only the sale of goods and services, which depends upon the nature of the business, goes into revenue. So when the nature of the business changes, the item of revenue could change. So let's say Menon Limited is a trading company. I just buy and sell product A. So the sale of product A is revenue. But I got a lot of money left. So excess capital in my company. So what do? I buy 100 lorries and I lease it out. Got it? But it's not an everyday activity. I may scrap that activity. It's not my mainstream of business. Just that I've got something extra. My mainstream business is trading. So I got some excess money. Let's say I buy investment property. I buy some leased assets or assets. I just rent it out. And I collect some rental income. Or I go and invest somewhere in shares. I get some dividend. That's not the mainstream activity. So when I earn something from there, I'll put it under other income. Got it? Now stop. So where must gain or loss on disposal of non-current asset go to? Speak. Correct, right? 3 past year papers you have where the finance director will tell the accountant, brands have been sold. There's a gain or a loss. Yeah, it's needed for the entity. It's part of the business. Just put it inside revenue. Our GP margin is very low. What's your job? You must clearly state. Conceptual framework says gain or loss on disposal is to be recognized to SOPL, but IAS 1 states only, come on, sale of goods and services relating to the nature of the business must be recognized. Gain or loss on disposal of non-current asset is to be recognized as part of other income. But as the syllabus progresses, you will learn IAS 38. That time 38 will also tell you the same story.
Because whether it's IAS 1 or 38, it's derived from the conceptual framework. You get the picture now? So these are the type of manipulation that comes into the picture. Keep that in mind. Next one, cost of sale, all of you know. Basically, it's opening stock plus purchases. Come on. Plus direct cost of manufacturing minus closing stock will give me cost of sales. All manufacturing cost goes into cost of sale, followed by gross profit. Understood? Okay, next one. Other income, you know. Distribution, all of you know, it's to do with selling and distribution expenses. Admin is to do with office. Miscellaneous expenses that cannot be categorized goes under other expense, but priority is given to finance cost. Look at your format. I'm sure I've written the word net there. Hello? Don't worry about my format and yours being different. Have I written everything for you? Okay, can you see the word net? Can you explain that to me? In UK, they have two items, interest receivable and similar income, interest payable and similar charges. But for us, we only have one line item called finance cost. So we will present this net, meaning to say interest receivable, speak dear, minus interest payable will go as finance cost for us. Are we clear? Okay. The next item, forget about associate, I'm not doing groups now. We have profit before tax, followed by income tax, which is governed in IAS 12. And then we come from profit for the year from what operation? Again, those of you who watch the conceptual framework, the framework says whatever we prepare in the financial statement must give relevant information. Miss, what do we mean by relevant information? It must have predictive value and confirmatory value. Again, I'm telling you, all these are inside the conceptual framework. Please study the topic. I can't do anything else for you. It's all done in the video, okay? Think logically. I had 4 different segments or 4 different departments in my company. One department doing very badly. Yes, always running at a loss. So this year, I decided to continue my operation with 3. One department running at a loss, I decided to close it down. I decided to shut it down. Means it's not going to be in existence next year. If I combine the 4 departments, am I not misleading the primary user? Come on. Don't you think the primary user want to know which operations will be in existence in the future and which operation will not be? Because forecast, budgets should all be based on which operation? Come on. Continuing rent. Discontinue, no more there one. So if I give a total figure, you agree it's misleading? For that purpose, later when you study IFRS 5, IFRS 5 says discontinued operation must be shown as a separate line item. Can you see that? Discontinued must be shown as a, come on, separate line item, but continuing operation is what is needed. It's the revenue, cost of say GP, distribution, blah, blah, blah. All that is for which operation? Continue. DC makes no difference. Like, give me the detail, don't know, it's not going to be there. So I will just present it in a, come on, single line. Stop. Learning so far is the format of SOPL. But it's only a basic format. Now I've written something at the top of the page, left-hand side. You've got 1 minute to read it. I'm going to ask you some questions. Here, right at the top. Read it. Tell me, as a company, pre-pandemic profits were very high. Pandemic, I ran at a loss. My company ran at a loss. Post-pandemic, I believe I will shut down the departments that are not making profits. And post-pandemic, I can still continue to survive. Is this information relevant to the primary user? So for the pandemic, we have incurred certain extra costs. Sanitization, now all the requirements, scanning requirements, blah, 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 and all that. It's not part of my yearly expenses. For that period, there was MCOs, there were possibility that I could have bought higher grade raw material because it was not available. You know what I'm talking about, right? So this year, I've incurred a lot of expenses because of the pandemic. Can I write a line item, extraordinary expense due to pandemic? Can I do that? Read. This is something about you all, dear. You all are part-timers. When I ask you to read something, read it. Can I use the word extraordinary expense due to the pandemic and put a separate line item? IAS 1 is very clear. The use of the term extraordinary and exceptional is not permitted. Got it? What is it? The use of the term. So even when there are natural disasters, fires, earthquakes, tsunamis, ISB says there's nothing extraordinary about it. Although a pandemic happens once in 100 years or so on, it can still happen, right? No. So do not use the word extraordinary and exceptional, because this was heavily manipulated in the past to deviate the attention of the primary user and indirectly mislead them. So don't use that word, but it's material. It affects decision making. So can I simply write expenses due to the pandemic and put a separate line item in the SOPL? Can I do that? That is permitted. So if information is material, you can decide, shall I put a separate line item? Or is it okay if I put it inside admin, but maybe I will disclose it in the notes to accounts? Let them read from there. Or maybe I think they may not focus and read on that. It's going to affect their decision making. They're going to say profits are down. Better I put it as a, separate line item. This requires judgment. Okay? So now stop. We already understood that we are permitted to put additional item, but we can't use the word exceptional or extraordinary. Okay, now I've come up to profit for the year. There stops SO. Yeah, you must know this format. Come on. Why do you know this format? In your current examination, syllabus has changed. Question 1, group accounts. He's going to give you a pre-populated SOFP or SOPL in Excel. But obviously, what was done is wrong. Okay, so there's a wrong SOFP or a wrong SOPL. What's your job? Read the question, write the theory. After you write the theory, come and plus or minus. Means you must adjust the wrong balance sheet and make it the correct balance sheet. So you see, when you adjust the balance sheet or adjust the SOPL, you need to know which item is affected. You cannot take a other income item and put it under revenue. Or you cannot take a revenue item and put it under other income. Do you understand what you're learning this for today? I call this as the skeleton of all standards. Means subsequently, every standard you learn will become the flesh of this skeleton. Do you understand what I'm saying? It's just a bone. But please How to know about revenue? IFRS 15 will come in. How to know about income tax? IAS 12 will come in. You understand what I'm saying here? This is the skeleton outline. So, having said that, similarly, come back to question 1. That's the changes from this semester, yeah? Of course, I'll be doing the new version, so you don't need to worry. But what I'm trying to say is, why is it important to understand this format? Only then I will know where I can make the correction. By reading what was done. Obviously, he's done something wrong, but I will know, oh, I'm not supposed to put it under other income, I'm supposed to put it under revenue. Better remove from here, add it up here. You know what I'm saying? You need to know this format. Okay, so SOPL is done. Next, come down to SOCI. Now you already know, OCI got how many items? Come on, 7. I only taught you 5. Okay, 16, 19, 21, 39, IFRS 9. The top 2 digits, can you see here? IAS 21. Come on, cash flow hedge, which is IAS WASLA, IAS 39. It's actually IFRS 9 now. These 2 items will go under the category, come on, items that, read it again, may be reclassified to SOPL. Compulsory? Optional. Up to the company. They may or may not do this. But items that will, optional or compulsory, cannot reclassify to SOPL. Miss, who decided this? Again, the IASB. That portion is rigid. So we can't change this format. Are you with me? So here will not be reclassified. We've got 16, come on, 19, and IFRS 9, the IIE. Can you see that? Okay. Now come down here. We've got IAS 21 and IAS 39. Now this grand total is OCI. Take a grand total. The profit, can you see a profit? Look, from SOPL, and the total of OCI will give me, come on, total comprehensive income. But tax in the SOPL, can you see I've written here gross? Right? And can you see there's just one line item, income tax? Okay, what does this mean? Everything here is before tax. Then we have income tax. So everything here is net of tax. Agree? So continuing operation must be shown gross, tax, net of tax. But what about DC? Yeah, one line item. So already net. No need to show la, gross la, net la. It's already going to be discontinued. So can you see here? This must be presented. So remember, what did you learn? Discontinued operations must be presented in a single line, net of tax. All clear? But how about SOCI? Look carefully and tell me. How will you present SOCI? Look carefully. I told you when you read, you must read carefully. See something here. See something here. Very good. IASB says SOCI, we leave it up to the company. They want to use a gross format also can. Come on, they want to use a net format also can. Gross means what? All that 5 items you learn, before tax, before tax, before tax. And you show income tax as a separate line item. Can you see that? So gross format means show everything before tax, income tax separate item, we present it net. But what is net format? Revaluation gain or loss, net of tax. Remeasurement gain or loss, net of tax. Come on. Translation gain or loss, net of tax. That means line by line, we will already show it net of tax, which means if you use net format, you won't have this separate line like income tax arising on. You know what I'm saying there? So up to you. You can show gross, one line item of tax, or you can show item line by line net of tax. So SOCI got two formats. SOPL got one format. What do you think about this? Criticize, do something. Don't just accept. Come on. Very good. It's inconsistent. So it's not really compatible. Different companies can use different formats, correct? So it impairs compatibility. And what's the logic? Why SOPL alone? Gross. Come on, this one net or gross. There must be a reason why IASB did this. See, in the SOPL, all revenue costs and GP distributed, blah, 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 is subject to one rate of tax. But this OCI item, tax jurisdictions can vary. Maybe revaluation gain or loss, maybe 20%. Come on, remeasurement gain or loss, maybe tax exempted. Hello? Maybe translation gain or loss, maybe 30%. When the rates vary, it might be easier to use net format and disclose it in the notes to accounts. But if all has the same rate, it might be easier to use gross format. IASB is leaving it to the company, but whatever you do, support it with appropriate disclosures. Have you understood the SOPL? So we stop with SOPL. You've got a 15 minutes break. Okay, we will come back and continue, and then we will learn what is reclassification, adjustment, and so on. Are we okay? You want a short break? Yes, I know. I can feel it. Dear, I want to tell you something. Afternoon, you're taking an assessment on CF. I've changed my mind. You haven't studied, right? Tell me the truth. Really? Okay, halfway. Never mind. I'll change my mind. I will give you a test on IAS 1. So you attend today's class, you do the test so that you will make sure you listen in class. Is that okay? Conceptual framework, I'll give you the test next week. No point, because some of you haven't finished. There's no point in me doing it. Is it clear? Okay, I'll stop here. So the time now is 9:34. Can I see you at 9:50?